Well, hello and welcome to our next instalment of Nucleus Insights, the future of energy. My name's Tim Fuller, and I'll be your guide today to all things energy. I know it's a topic on the forefront of many people's minds, particularly if you've just recently got a hefty bill in the mail and likewise are a reader of macro business. So obviously, any information that you find from this presentation or any of our presentations is just general advice, and please seek a professional before acting on it. So there we go. So of course, myself, Tim Fuller, I'm a certified financial planner. Been working in the retail advice space for a number of years. Really enjoy getting in and helping clients with their personal needs and finding great solutions to that. I will also, of course, now welcome David Llewellyn-Smith, beg your pardon, I've got copped an eyebrow there. Obviously, co-author of with Ross Garnaut of the Great Crash of 2008, and editor of the Garnaut Climate Change Review. He's was the chief economics editor and founder of the Diplomat magazine, and is now, of course, the chief editor of the highly read and very successful macro business blog. Welcome to you, David. Also sitting next to David, we've got Damien Klassen, of course, our head of investments at Nucleus Wealth. Has a very broad and quite impressive, actually, resume sitting behind him there. As you can see, many years working in large cap stocks, handling really big money with Schroders, also doing some work as head of quantitative strategy with Wilson HTM. And prior to that was the founding partner and head of investment research for a reputable stock analyst firm called Aegis as well. So welcome to you, Damien.
Thanks, Tim.
So what are we going to talk about today, fellas? Obviously, energy is the topic. Look, we'll run through a couple of quick things here in the agenda. So looking at, I guess, old versus new ways and means of technology with some curves there. Looking at some pricing, of course, utility and residential pricing and how that can affect, obviously, the way energy is created and who uses it and why. And ultimately, of course, how does this reflect back into a portfolio, and how can we look to profit from that, and what are the trends there as well? So we'll kick it off, and let's hop into curves. So we're looking here at what appears to be a coal commodity curve. Would you like to fill us in here, Damien?
Yeah, this one's just illustrative of what you're seeing most around a lot of places in the world. Is that the more coal we need, the deeper you have to dig, and the more costly it ends up being. So there are some technology gains from better tractors and sort of automation and things like that, but they tend to be subsumed by the fact you have to dig a lot deeper. This one's sort of showing that this is just Queensland thermal coal, showing that you needed to move 8 tons of dirt for every ton of coal that you got in the early 90s, and now you're well up above the sort of 14 level, getting close to double the amount, and you see that pretty much around the world. People either having to dig deeper or move more dirt, and a lot of them starting to go underground, which dramatically increases the cost for these. On the flip side, technology sits on what we call an experience curve, and where the more you make of it, the cheaper it gets. And this is a sort of dramatic chart, sort of showing that solar power, how in the 70s it was extremely expensive, when basically all it was being used for was a few satellites or spaceships, and then as you build more and more of it, the costs come down quite dramatically. So yeah. And so that's sort of so you're faced with the two. If you put the two together into the next sort of graph, what you see then is that you see the price of solar looks, when you see it on a long-term basis, is a very dramatic sort of decline within the level of that solar graph.
It looks like it's literally falling from the sky there.
Yeah, that's right. But it's not going to go through zero. It looks like it's going to go through zero. It's not turning into negative cost. But this is all priced on a similar basis. Sort of, it's MMBTU is what it's called. Millions of units of British thermal units. And so if you put everything all onto that same type of cost and try and levelize everything, and you zoom into where we are now, you can see that utility level solars passed nuclear and coal a few years ago. recently passed gas, and wind has been coming down as well. That's sort of another thing on a technology curve, rather than what I'd call a scarcity curve for the other ones. And so we're at the point now where utility solar is becoming the cheapest. Renewables are the sort of cheapest ones out there in particular locations. So.
And is in regards to particularly the utility side, is that just efficiencies of scale there, or what are the factors that have brought that down so quickly?
Some of it's scale. A lot of it's just volume. If you make 1,000 units of something, you've got a particular cost. When you can then make 1 million units, you get bigger factories. You get your supply lines get more efficient, and every time you sort of add, and then you go from 1 million to 10 million, and 10 million to 100 million, and so a lot of that is just experience. There are technological gains as well. So the efficiencies of a lot of these technologies is increasing quite dramatically. And it is also worth noting that there are different costs according to the fuel level. So I've got some. These are very indicative lines that I've got here. I'll run it a little bit later in terms of coal, for example, whether it's priced at $100 or priced at $50 a ton for coal makes a big difference to where it sits on that line. And also with solar, depending on where you are. So whether you're in somewhere like London or that's this next one. If you're in London or Moscow or something like that, you've got pretty poor solar resources. Most of the rest of the world, not most of the rest of the world, a lot of other places in the world have got quite good solar resources. So I've thrown up a chart here of sort of the global horizontal irradiation level, which is sort of a measure they use to try and work out how much you can get from solar power in different countries. One of the key things that I do note within this is that if you can see the graph, you can note that a lot of the developed areas of it, in terms of Africa, South America, Mexico, most of the Middle East, India, have very, very good solar resources, especially compared to most of the developed areas. So most of the demand we're going to see going forward, we're expecting to see is very much from these areas in terms of growth. So happily for the planet, the places that are most likely to increase and need more energy over the next 10, 20 years are also the places that tend to have the best solar resources. One place that's not that way is China. There are areas in China, and they're certainly doing, and sort of, I guess, one of the positives there is they are actually doing a lot of development. They're actually leading the way in a lot of solar to sort of offset some of their weaker resources there, and they're building a lot of solar in that sort of top left-hand corner of China, and long ultra high capacity lines just to ship the energy back to the eastern part where most of the people live. This
might be a curly question, but do you know if this graph actually takes into account factors like pollution and things like airborne particulates that might be slowing down the rays?
I think it does have something in that. I'm not 100%, but I do think it's got it does relate that, and that does make a difference to places in China, as you said, as they're they're putting in some measures right now to shut down a lot of factories around Beijing, and that's only going to improve the solar resources that you see within China.
Lovely. Okay, so obviously as a proud owner of a set of solar panels recently myself, and I know you guys are sick of hearing about them, but obviously one of the things I've noticed is plenty of gain through the day, plenty of production during the day, and then as soon as I get home, when I need it, it's not so great. Better in summer, I might admit, but not maybe in our Melbourne summer at the moment. But so obviously the next thought goes to batteries. Do you want to chat us through the battery graph here?
So the key thing with energy is that while we've seen those rates come down, I showed you those graphs of solar's and wind. They're not the same as coal, because we do need a lot of energy at night. And so to me, the real comparison we should be making is actually solar plus battery compared to, or wind plus battery compared to coal or gas. And that's where, happily battery prices are also on this similar curve. They're flying down. If you jump to the next slide, sort of shows how those similar lines. So you haven't met. So whereas I had a slide earlier on showing that the utility price for solar has met and is below the cost of other options. If you're looking at solar plus battery, that's not the case. And I've separated into two different areas as well. There's solar plus, there's full shifting, which is basically, can I go off grid and supply all my energy needs? And then there's this partial shifting, which is a lot less expensive, but it covers for what you're talking about, which is most of the usage is done sort of between that.
Just after the sun goes down normally. Yeah.
Yeah. And so you basically just need 2 or 3 hours worth of batteries to get you through to that sort of peak period, and after that you don't have to worry as much about it.
Absolutely. And just quickly on this graph, obviously the trend there is looking to meet those other costs, sooner rather than later. Do you see that happening in the next few years, 5 years?
Look, I think 5 years is a reasonable expectation in certain areas, and so it really will depend upon if you can access particularly cheap gas. So let's say the middle of the US, and more towards the upper of the US, where they might not have as good solar resources, you're probably going to find that the energy there gas is still the cheapest producer, and probably will be for some time. In areas where it is harder to get gas, in places, let's say like Australia, where you've got lots of gas, but you're selling it overseas for inflated prices, you'll find that, and you've got very good solar resources, you'll find that it comes earlier.
Okay, sure, great. Duck curves. Tell me about this remarkable graph called a duck curve.
Yeah, so this is just an indication of there's this thing in California where they sell their electricity on a day ahead, and so what they look for people to bid into to what they'll supply energy for at different times of the day. And what they're finding is they're needing less and less power during the day, because more and more of it's being delivered by solar. And so the prices in the middle of the day are being pushed down, and you get this sort of vaguely duck-shaped curve where both in volumes and price, the middle of the day is really going down, and quite possibly will reach close to zero. For a number of big electricity plants like coal or nuclear, you can even go negative, because it's cost you to shut down, and so you're actually happy sometimes to pay people to take your energy so that you don't have to shut down. So, if you think it's only going to be for an hour or two, because the cost of shutting down for that hour or two and then having to start back up again is not worth it. So and as a solar power and wind power, there's very close to zero marginal cost in terms of those, and so that basically the sun's shining, they're pumping into the grid,
and their downtime is just basically no cost. They just park her up. Okay, fantastic. So speaking of costs, let's go through some current pricing.
Yeah, so this is I've got a table up here, and for people who are just listening in, so basically at the top of the table you've got the onshore wind, which is your cheapest cost at the moment. Natural gas, very cheap natural gas. If you can get it for $3 per MMBTU or lower, you're probably around about that 3 or 4 cents. Utility solar is roughly about that same as well, again depending upon where you are, very much depending upon where you are for that solar. And then after that, you sort of you get your coal, your natural gas at higher prices, and then your coals. So coal sort of 6, 7, and 8 cents. One of the key things to note with coal versus natural gas is that a lot of the cost of fuel for coal, it's not as sensitive to it. So natural gas plants tend to cost you less in terms of the capital cost of it, but then you've got a higher proportion of your cost goes into the fuel. And so coal, so the coal price doubling from $50 to $100 doesn't make as much difference as the natural gas price doubling in terms of the cost that that ends up being charged back.
And this is because of the capital cost of the coal.
Because of the capital cost.
Offsetting that. Okay,
yeah, that's right.
That's interesting.
And so none of these figures include carbon taxes. So gas is roughly 50% better in terms of carbon than coal. So once you start adding carbon taxes to these, you're probably talking another 1 to 2 cents for gas, and probably 2 to 4 cents for coal you could add on to these, which will then sort of lift them up above and get them a lot closer to that utility plus solar. And so there it's sort of utility plus a partial battery is sort of, I've got it 14 cents. And so, if you've got coal at 75, that's sort of roughly half the cost. If you can make up some of that through a carbon tax, and then the rest of it you sort of get from falling prices or falling costs within that sector.
Okay, sure. So, and on the topic of obviously falling costs, we've run through there the cost curve falling for the solar side, for the green side. So, if we were to imagine say a 10% fall per annum for the next 5 years, I see you've got a table here.
Yeah, so that'd put your utility solar around about 11 cents. And the thing with solar is it's the solar plus batteries has been falling at sort of 20% per annum over the last few years. So that will slow. Will it be in the next 5 years? Possibly. There are some big jumps they're looking at in terms of battery technology, which could give you a further step down in terms of costs. But I think certainly, I think 10% is relatively is a decent base case. And there is downside risk in terms of, look, you could see prices fall faster than that. And that sort of puts solar right at the top, and it really does limit the where you can go from there. I think the other thing to note is when solar hits that point, it's not as if all of a sudden these factories these power plants are all going to shut off. Mm-hmm. If you've got a coal-fired power plant, you've already built it, you've spent the money. It is just now a matter of trying to work out the runoff and how long until you want to shut it down. As we've seen in Australia, the key thing is they don't want to spend big bits of money to refurbish them. And so AGL, has been in the press a lot recently, and we've had the big shutdown in Victoria. Is that companies involved in it don't want to be spending hundreds of millions of dollars for something where they don't know whether carbon taxes will put them off, or just the continued decline in renewables will just mean that they can no longer sell electricity profitably.
Yeah, no, it would put a pretty big question mark on refurbing an old model gas plant, wouldn't it? No problems. All right, so if we move across from the utility side to the retail side.
Yeah, so I've deliberately left retail prices off that curve. So retail prices are considerably more expensive. We were talking about 4 cents for utility solar, and sort of 14 for a utility solar plus battery. You're probably talking more like 50 cents, 50 to 60 cents for retail solar. And when I say when I'm talking cents, I'm talking these are all US dollars per kilowatt, just so that we can do comparisons across countries and on a more a simpler basis.
Sure.
The thing is though, as a Tim, you're a user. You don't care what the utility prices are. What you care is how much the retailer is going to sell it to you for.
That's right.
And so I've got a bit of a graph there, a bit of a chart, sorry, of showing the different prices. In terms of US, China, India are all sort of 15 cents per kilowatt. Australia sits in the sort of 25 to 35 range. And then Europe, the average across Europe is about 30 cents, but you get sort of at the upper end, you get places like Germany where it's 40 cents.
Yeah, that's interesting. I'll stop you there though. So obviously, US, China, India, big markets. What would be the sort of disparity between the the lower and the top countries?
Yeah, so US is access to cheap gas is one of the biggest ones.
Okay.
They also have the coal in the middle of the US is very, very cheap as well. So in the US, China and India, and a lot of developed markets as well, subsidize the electricity.
Yeah, right. Okay.
And whereas you have the flip side in Germany, where there's a lot of they've got a carbon tax in Europe, and they're actually actively trying to move people off carbon technologies and into greener technologies. So taxes is one big part, but also then access. Germany, if you want gas, you're piping it in from places like Russia, and while the gas is very cheap at source, it's got to travel a long way before you
through a few ticket clippers.
Absolutely.
Okay, so in continuing the theme of the 10% fall over 5 years, where does this place the retail side of things?
Yeah, so that now puts the cat amongst pigeons, because now you're looking at your rooftop solar plus partial battery is now competitive and in places it's looking at sort of 28 cents, and so quite possibly that means that it starts to turn into a no-brainer in a lot of places. Anywhere where you can, where the cost is sort of 30 cents or more per kilowatt, it just gets to the stage where you say, well, why wouldn't I put a solar plus partial battery solution on? And solar plus full is still above, but it's getting there in places like Germany. Well, Germany's probably got poor solar resources, so it's not quite as good. But places with good solar resources and high prices, 5 years could easily see these prices at parity.
Sure, and I guess a common argument with the the off-grid sort of scenario as well, the solar and full batteries, whilst you're paying perhaps higher prices now, you're insulating yourself from price rises in the energy market in the future.
Yeah. Well, actually, I'll pin that for a moment because I want to talk a little bit about going off grid and what that actually means for the rest of the. There's a bit of a play here, whereas that might be a good thing for individuals and whether it's good for the networks and who's going to pay the end cost of that. But okay. Let's come back to that, because first I just want to talk about the demand side. And I alluded to it a little bit before, but this is where we've sort of got this falling demand that this is on a per capita electric consumption. So you can see, for anyone who can see the graphs, we can see that across almost every developed market, price the per capita has peaked and is falling away, and we still have developing markets, which are still on the increase on a per capita basis. But certainly we are seeing sort of falling demand, which is sort of throwing that, which throws then into this next thing about this whole death spiral. So the idea with this death spiral is basically that solar plus battery comes down in cost, and as you said, it starts to make sense for people to leave the grid. You get to save yourself your network connection charges. Meanwhile, we've got the networks saying, well, we're not making as much money from this, so we actually need to start increasing the cost, because now, rather than having 1 million people sharing this transmission network, now we've only got 900,000 people sharing it, so we need to up the cost for those 900,000 to pay for it, which then means more people want to jump off, and you sort of end up in this, what we're calling a death spiral for the electricity network.
Sure.
So the question is, though, who pays for it? And so there's sort of three options I can see for this. Is one is you see government step in and say, when the electricity network says, well, I've only got, I've gone from 1 million customers to 900,000 customers, I'm now increasing my prices so I can get my profits back.
Mm-hmm.
You can have government stand up and say, no, we're this is a very regulated industry. They'll put the foot down and say, no, that's not the case. You bought the asset, it's yours. Take a loss. You made an investment decision, bad investment decision, sorry guys, and take a loss on it. It's possible that'll happen. There's obviously a lot of lobby groups, and these guys are acting very, I think that's the politics are going to be difficult within that.
Yep.
That's probably the people who are best to pay for it, but
probably won't.
Probably won't. No. Your second part is socialize the losses. This is sort of what we've seen with Uber. Where your person who bought your taxi license and the license is no longer worth what it was, there's going to be a government handout for those people to make up for some of those losses. Whether that's the best thing for everyone involved, I'll leave for listeners to decide for themselves. But certainly, there's an option that everyone will pay for it in higher taxes, and you'll hide the increased electricity cost. Which having said that, will at least that will spread it out amongst everyone, and the people leaving the network, the people left on the network won't be left to pay for everything.
Okay.
And the final way is for nothing to happen, and basically it shifts the cost onto the poor. So anyone who can't afford to stick solar panels on there, and renters and people like that basically end up bearing the cost of all the
whole network.
Yeah, the whole network, and the rich people who can leave it. Now, unfortunately, that's the path of least resistance. If we do nothing, that's where we're going. And there's certainly some lobbyists who are actively, the asset owners are actively lobbying to make sure that the first doesn't happen, and they'll lobby pretty hard to see if they can get the second one to happen. But in their mind, the best thing to happen would be to for everyone to do nothing and muddy the waters and confuse the arguments and wait for the poor the
voting bloc to respond.
Exactly.
No problems. What we'll do finally as well, thanks Damien, is obviously move into obviously our bread and butter, which is investments. And I guess given all that information now, and obviously the path that these various energy sources and means are on, what are we making of this in terms of the global markets and investment opportunities?
Sure. Look, I'll move on to the actual stocks in a minute. The first thing I just wanted to highlight is that if we're trying to look at a vision of the future, and we often speak about Japan being our vision of the future for a lot of other places in terms of the demographics, and they've been through this deflationary push and problems with debt and things like that, you would generally think that the US would be the place to look for most things in terms of the energy, because they are relatively advanced, and that's where Tesla lives, and their batteries, and they've got all this stuff going on with they've got quite an integrated markets in terms of energy. My view is that that's actually not the place to watch if you want to get a view of the future. Is that Europe's a better indicator? Europe already has a carbon tax. The prices are a lot higher in Europe. So if you're doing renewable energy, then you've got a better chance of making a profit in Europe, where you can get, as we saw with Germany, prices are very high there. And so while we're certainly watching what's going on in the US and looking at the companies there, in terms of how the markets are going to evolve over time, we actually think Europe's going to be one of the better places.
The place to watch. And do you think from a political sort of standpoint, I mean, these taxes and bits and pieces are in place, it's sort of something Australia will follow in lockstep, which I guess probably make it a good bet?
Yeah, look, I think I think it's safe to say that America's not going to be making too many movements in any time in the near future in terms of helping with carbon taxes and penalising producers of coal. I think they're quite possibly, they look like they're trying to do everything they can to roll it back the other way. I think if you look at any of the science side of it, it's pretty unambiguous, and this is where we're going to have to go.
Mm-hmm.
Quite possibly there'll be a bit of a backlash in the US and following in Trump, but you're talking years away before that happens. So in the meantime, watching what's happening in China, watching what's happening in Europe is sort of where we're getting the leads from in terms of this market.
Yeah, sure. I might just we'll swing over to David. He's been very quiet in the corner there for some comment as well. Thanks, Damien, for all that. Welcome, David. Glad to have you on the show.
Thanks, Tim.
So, was there anything you'd like to add? I guess just while we're on the foresight before we move into the various investment options.
Well, I'll just add that was a terrific wrap for a start. I think that gives you a very good context through which to understand what's going to happen locally, which is where I would add some commentary. The key input here at the moment is the gas price, which unlike the US, which has boomed from a cheap gas price after the advent of unconventional gas, we've gone the other way, where we've dug up a lot of unconventional gas and sold it offshore and left ourselves very short of gas over subsequent decades. And that has had two impacts. Well, firstly, it's driven up the gas price on the East Coast very high, from sort of averages of around $3 a gigajoule to at the moment somewhere between sort of $13 and $18 a gigajoule, and that's happened in a very, very short period of time. So that's putting an awful lot of pressure on gas users, on one dimension of energy. But the second, and probably even more important dimension of it, is that gas is the marginal price setter in the national electricity market. That is, when the users go into their auction to offer slabs of energy in the wholesale market, gas is always the highest priced one, and so that's the price that gets set for everybody. And as a result, that's driven, as Damien's numbers showed, the sensitivity of the gas generators to the price of gas itself has driven up the electricity price substantially right across the eastern economy. And in fact, we're now running gas prices that are double Western Australia's, and so we've got these rolling energy shocks across the eastern economy. So when we're talking about the future of energy in Australia, what we've basically done is applied this enormous gas-generated carbon price, because it's excuse me, effectively priced itself out of the market. And that means all of the dynamics that you're seeing Damien describe are likely to transpire here at an accelerated rate, basically. It doesn't matter, what the government does. It argues, obviously, until it's blue in the face about renewable energy targets, national energy guarantees, and I could give you half a dozen other acronyms that have come and gone over the last decade of fruitless policy. But in the end, the market, or the collapse, basically, of the Eastern gas market into what is now a cartel driven system is in effect a massive carbon price. So, you're going to see accelerated change towards those renewables. You'll see those curves come in much quicker in Australia. We've obviously got excellent solar resources. You'll see rooftop come in, be much more competitive, much more quickly. And so that's probably the key takeaway in terms of how, Damien's presentation is going to affect most people down under.
And so would you think, so in what's been effectively, the mishandling of just gas in Australia, do you think it's got to the point now where renewables are just going to leapfrog over it and infrastructure is going to head down this renewable path and completely miss out on, what is probably, one of our best resources?
Yes, it will. If it's left to market forces, absolutely. I mean, that doesn't mean your coal-fired and gas resources simply collapse. As Damien said, they'll run through their lifespans, but they simply won't get reinvested into. As AGL is already showing, with the government trying to keep its next coal shutdown, Liddell, open, and they're telling them to go to buggery, and they're going to reinstall, rejig it for renewables and batteries. So. The one thing that could slow it down is this national energy guarantee policy. Depending on the critical number in that is what is the carbon intensity that is allowed under the guarantee, which could enable coal to stay, viable a little longer. If that intensity is high enough, thank you. But that number is basically the same number we've been fighting over for 15 years in the Parliament, and so I don't expect that outcome to be material. Frankly, in the end, I think your description will be right. Okay,
sure, no worries. Thanks, David. And look, what we'll do then is just finish off on, of course, the investment options. So, big theme: energy. Plenty of players in the market, plenty of companies, and not just, of course, the creation of energy, but also the transmission and the maintenance, and then obviously the end users of it as well. Where are we looking? What's given obviously all the information there? I'd expect coal and gas to be fairly low, perhaps on the priority list for investment. But yeah, let us know, Damien.
Yeah, look, absolutely. I mean, in the end, though, any investment comes down to price. So we just want to make sure we've sort of we've got our what we think the quality is. We think they're in runoff. We need to price them in runoff. And if you've got 100 years worth of coal reserves, then we ain't valuing your company at 100 years of coal reserves. So in my mind and in my numbers, the coal and gas companies are too expensive at the moment. They're still pricing considerably higher prices for considerably longer. And I think that I use this solar plus batteries as my upper bound in terms of saying that's where our prices just sort of gradually fade off. So happy to invest in the sector if I can value it in runoff and make money on it. But at the moment, that's not the case. Solar companies, look, the manufacturing companies, it's very difficult. I haven't thrown up some charts, but I've put it on this deck, but I've put them up a few times just showing the number of different technologies and trying to pick the winner in that. You've obviously got governments throwing a lot of money at it, particularly in China. They're spending a lot on research and development there. So a lot of solar companies suffer because the Chinese can put these panels out a lot cheaper, and whether there's government subsidies and things like that happening there.
So when you say solar companies, you're talking about the different kinds of solar panels or the different techniques of harnessing solar?
Oh, yeah, that's right. Whether it's a technology to harness it, and whether you're putting in multiple layers, or whether you're using thin film, or there's about 40 or 50 different technologies, and each one of them's got its own sort of. Some of them give you better returns, so you can get sort of 30-40% of the solar energy, but cost a lot more. And there's other ones that only get a few percent of solar energy, but cost a lot cheaper. So each one of those, it's very hard to try and work out who the winner is going to be within that. I think we're probably more interested in some of the semiconductor stocks. So what you can find is some of the stocks that manufacture the parts to it, and similar parts that you see within the rest of the industry. There's a more commodity type parts, but if it's a growing area and you're producing these semiconductor parts of it, then there's benefits for that, and the margins aren't very big in that market, but it is a growth area. And
I guess those companies would typically have sort of fairly diversified offerings into other areas as well, and might not be just a one-horse solar play.
That's right. Yeah, yep. Certainly most of the time you've got other other benefits from expanding digitization and cars needing more memory or different types of things, to different semiconductors for radars and cameras and things like that. So some of the semiconductors, some of the other ones we look at is people just involved in the networks. So we think that there's going to be a decent amount of change within networks. So you're going to need to retool them to have batteries in there, as we've seen in South Australia just recently, and we think that trend's only going to continue. And so people who service that area of the market, are certainly interested in terms of trying to find those companies and people that can benefit from sort of the more industrial or type of, plugging that stuff in and whether it's and having service contracts to keep these things going.
So essentially, like the shovel makers of a boom, effectively, rather than the resource stock themselves.
Yeah, absolutely. In terms of companies, if you look at people's costs, I think anyone running high electricity bills will benefit in the longer term. There's certainly some shorter term issues in Australia, and so managing that. But we sort of keep an eye out for companies that do have high electricity bills and looking for the right opportunity to invest in some of those. Anyone who could shift costs, certainly if people who can shift those costs into the daytime. If they're getting, we saw that duck curve. If you're getting very cheap electricity prices during the day, but quite expensive at night, and people who can shift the costs around. So that's sort of where we're looking at in terms of the industrial side of it. You really the last few years have seen, probably the last 10 years, you've seen some manufacturers in the US benefit from lower energy costs, so in particular chemicals and things like that.
Okay.
And people who aren't in the US have then lost out from that, and so potentially we'll see that some of that start to reverse as the solar technology sort of brings prices down in some of the more expensive markets. For the oil market, we'll run into oil next week in more detail, but in the short term, at the margin, this is there are diesel-fired power generation for remote areas. We expect this to die quite quickly, and that's one of the most expensive expensive ways to generate power. And so the backup generation and power generation by diesel we expect to very much die off, and so at the margin oil demand is going to be a bit weaker. On the electricity side, the question about whether they're going to get bailed out, will they be allowed to increase prices, are they going to have this death spiral? There's the risks within this. You really need to look country by country and at the politics of it. And then finally, production side is, the tough thing with investing in producers is that even if you're a solar, you manufacture yourself a solar farm, the guy who produces one for you next week or the week after probably has lower costs than you because he bought his solar panels for cheaper, and so he can take lower costs and still still make a profit.
Beat you to market. Yeah, sure.
So we're quite circumspect in terms of those markets,
but still, I guess plenty of area to look into
Absolutely, yeah, lots. And I guess the overarching thing is we're more looking for the losers than the winners.
Yep.
We think the losers are a lot easier to pick out and work out and sort of avoid from avoid those losers. And
Okay, yeah, very good. Just had a question come in actually, just while we're on the topic here of electricity production. And it's from Paul. What about storage, such as pumped hydro, molten salt, and batteries? Here we go, and there's more. And can nuclear stage a resurgence, as it's now being promoted by Hansen and others?
Yeah, sure. So I'll pick the first one first. So pumped hydro is quite a cheap method of storage, and it's good. It's just very hard to find the right areas for it. So if you're in the right area, it works well.
It's just topographically challenged.
It's a tough one to spread out. Similar with molten salt, it's a relatively cheap technology, and you've seen some gains from it. I think in terms of scaling it though to across a broad range of people and people at houses and things everywhere, batteries are very hard to go past. And there's lots of different technologies in batteries that are, there's obviously this huge race for cars on at the moment, led by Tesla, but there's lots of different battery technologies that are out there in terms of solid state batteries and various different types that sort of mean to me that I'm not quite sure again which one of these is going to win. And as costs fall, the net winner is lower energy, I suppose, rather than trying to pick treat it the same way as trying to pick the solar winner. I'm not quite sure which solar technology is going to win out. I'm not quite sure which battery one's going to win out, but I do know the costs will be lower, and I do know that it means that if particular elements of it, whether it be nickel or lithium, happen to increase dramatically in cost, that there will be there'll be other technologies out there that will be cheaper, and people will just be switching into whichever the cheapest technology is
and benefiting from it, no doubt. And just a quick one, thoughts on nuclear in Australia, I'm guessing. Any thoughts there?
Yeah, I'll toss this one to David. My feeling on nuclear is that it's very hard to see a big pickup in nuclear. I think there's a psychological resistance to it in Australia, and to get people over that psychological resistance. I mean, we're still arguing whether, notionally, I think some politicians are still arguing about whether climate change really is real and what we should do about it, and maybe we shouldn't do anything and things like that. To then take a leap on to pick quite a hard technology like nuclear, I think is going to be very difficult for that. David,
thoughts there, David, on nuclear having a resurgence or back into Australia?
Well, I mean, the scientific arguments for nuclear are pretty good. But as Damien says, there's a big gulf between that and the political economy. So I share his view that it will be very difficult. I mean, there are two fronts that you've got to get over for the policy. The first one, being obviously the risk, widely perceived risk of meltdown, and we live in the NIMBY age, and there's not a single suburb in Australia that would volunteer to have a nuclear power station in its backyard. And the second one, of course, is when you go nuclear, you've got the waste to deal with, and that comes with two challenges. One is storing it, but the second one, of course, is the strategic issue of weapons grade waste, and so that challenges the policy a whole sort of second round, given the possible strategic implications. So the argument for it obviously is just scale. It can be scaled much more quickly than renewables, and pump out enormous amounts of power. And in fact, its safety record isn't too bad at all. If you take this sort of cold hard look at it in terms of actual fallout or deaths resulting from nuclear power versus other forms of power, it's actually pretty good. But that's simply not the perception, and it's very difficult to change. Outside of Australia, I mean, the prospects are certainly better in China for nuclear, which does have a program to boost it. India as well, perhaps a little, although as Damien pointed out, solar is going to be very tempting in India, especially given how decentralized it is. In other areas, post Fukushima, it's gone the other way. Certainly in Germany, Japan. So it's difficult to see. I guess the one argument you could make in favour of nuclear is if the science kind of manages to communicate more freely with the populace, it's increasing concern, over, the accelerating pace of climate change, then you might get enough panic for a kind of burning platform change in attitudes. But at this point, it seems things would have to get worse before nuclear became an option.
Okay, sure thing. Thanks for that. And I'll jump to just one other question that I see here from Ben. You mentioned that the incumbents will lobby government to bail out their stranded assets earlier in the presentation. To what extent do you think that will slow down the transition to renewables?
Yeah, I'm still thinking through this one. I'm not thinking it's a major issue in terms of the speed. I think the technology itself is going to, and the prices there are going to dictate it. Possibly it's a little bit faster if it's a buy it to shut it down type of mechanism. I think I guess I tend to work all my numbers off. Assume no taxes, no carbon taxes, all that type of stuff. Let's see what makes sense, and then move from there. Because in the end, subsidies and taxes will distort things, but there's only a certain element you can distort things. So for example, if you're subsidising a particular type of technology, that might be fine while I'm making lots of tax money from the traditional ways, and I can help out the new ones by putting a small bit on helping people get solar panels. As all of a sudden that balloons out and it starts to become half the market's got them, now all of a sudden I need to wind back those subsidies because otherwise it's just costing too much to do that. So
in a sense, you sort of get this mean reversion of cross subsidisation, where eventually you can just sort of would you just cancel it out, or is it easier just to think about it as a base case, economic case, and then sort of worry about the politics later?
Well, I guess that's why I try and run everything off a no taxes, no subsidies type model, and then sort of look and say, well, if we're getting subsidies, that's going to help accelerate it by 6 months or a year or something. Something that might take 5 years. If we've got some subsidies, might end up being 3 or 4 years. And flip side, if you start taxing these things or reversing it, well, maybe you can stretch it out to 9 or 10 years if you want to go the other way. But it's I think the underlying technology is going to drive it, and whether they manage to get bailouts or not, best case is they're buying it to shut it down. But David, you might have some thoughts.
Just one thing to add on contemporary politics. I mean, you could see the National Energy Guarantee certainly as an attempt to slow down renewables, but again, it comes back to that emissions intensity number that they apply to it. And even if the coalition does put in a high number, enabling, fossil fuel generators to last a little longer, Labor's going to come in and change that and lower it anyway. So I mean, we'll have this constant kind of toing and froing and uncertainty around, carbon pricing that will benefit and then retard development of renewables, probably with a net effect of, who knows what. Probably neutral over the long run. And so I think Damien's methodology is the right one.
Okay. And actually, to add to that, the amount of uncertainty, basically what it means, as we've seen from AGL, what it means is that the investment side's pretty much done for now. Like most people aren't looking, if they're looking at a new one, especially in Australia, if they're looking at a new one with all the back and forth, they're saying, look, I don't know what politics are going to do, so I'll assume the worst. Which is actually not a bad outcome from the investment perspective. So what it probably means, putting a high number just increases the company's profitability for that few years before they have to shut down. So, really, we've muddied the water so much, but I think the one benefit is the water is so muddy that people do not want to make long-term investments based on the back of flopping and changing around in terms of the amount we've had in terms of energy policy.
Yeah, sure. I could say, yeah, and particularly with the sort of rapidly changing Australian political landscape as it is, you're on a hiding to nothing, really, aren't you? If you're trying to second guess what's going to happen or which prime minister is going to be in next year anyway, at the rate we're going the year after. Very good, gents. Well, look, on that note, we are a bit pressed for time, so I'll thank you very much to our head of investments, Damien Klassen, and our head of strategy. Or we're going by chief strategist perhaps, David Llewellyn-Smith as well. Thank you for your time, gents.
Thanks, Tim.
Very good. Tim. Thank you. So we'll just quickly move into a little run through of what we do. So obviously at Nucleus Wealth, we invest for our clients all over the world using what's called a separately managed account. Look, we do that because it offers our clients and investors unparalleled levels of transparency. And the provider we use is Linear, who are backed by ANZ for cash management and JP Morgan, one of the biggest investment banks in the world, for custodianship of those assets. We do also offer, interestingly enough, given today's topic, a range of ethical screens, one of them being there, as you can see, climate change, which may be of interest to you. What this does is it actually gives you the ability to granularly remove stocks from your portfolio, from our larger portfolios, based on your ethical mindsets and beliefs. What it does in a sense is that you can then lock these out of it. But in regards to other ethical options out there, this does allow you to pick and mix as opposed to having to choose from someone else's preset mixes as well. On top of the individual screens, we also have, of course, so we offer, as you heard today, the complete investment solution for both local and overseas shares. We've also obviously used cash and government bonds. We've worked out a way of basically removing the layers of middlemen in investments, and this has helped our much reduced fee, our quite competitive fee in the market. Experienced investment managers, as you've heard today, and we've also, of course, because the separately managed account does essentially mean you've got your own individual discrete portfolio of shares. It gives you the transparency therein, and also, of course, the tax benefits of owning shares in your own name. So feel free to check us out. We've got a Get Started with Nucleus blue bar at the bottom of our screen if you'd like to log in and check out what we can do for you. Our next presentation, same bat time, same bat channel of Tuesday at 12 on the 12th, sorry, at 12:30 p.m. is on the future of oil, continuing our energy theme for December. Feel free to shoot across to proton.nucleuswealth.com to register your interest, and of course we'll see you back here same time next week. So on that note, also if you have registered attention, we will be sending out our survey as we do. It's a handful of questions. Just gives us a little bit of guidance on topics that you'd like to hear about, and also gives a little bit of feedback on how we've gone today. So with that, I thank you very much for tuning in. I hope you got something out of it. My name's Tim Fuller, and we'll see you at the next one. Thank you.